Most California homeowners don't realize that there are actually two very different type of earthquake insurance options available to them. Many assume that the California Earthquake Authority or the CEA is the only option available for earthquake insurance. However, there are also private standalone earthquake insurance companies that offer earthquake insurance in California that, depending on your home's location, the type of construction, the coverage you're looking for, one may fit better than the other. And in this video, we're going to take a look at what the CEA is, what private earthquake insurance is, what the coverage differences are, deductibles, pricing, and the pros and cons of each. So stay tuned. Let's take a look at these together. Okay, so here we are. Let's take a look at the CEA versus private earthquake insurance. What is the California Earthquake Authority? The California Earthquake Authority, first, it was created right after the Northridge earthquake, and this is a story within itself. The Northridge earthquake almost collapsed the housing market in California because the home insurance companies did not want to issue homeowners insurance. Because if they issued homeowners insurance, they would also have to offer some kind of earthquake insurance. And because of the massive amount of claims and losses the home insurance companies had, they didn't want to offer earthquake insurance. It was a bad risk for them. So the only choice they had was to not even offer home insurance. And the legislators came together, they created the CEA to provide capacity or availability for home insurance companies to offer earthquake insurance through the California Earthquake Authority. And what it is, it just helps provide earthquake insurance for Californians, and it's a state managed program. It's got standardized coverage structure, meaning that especially back then when it initially started, it had very few deductible choices and coverage selections. It was 15%, which is the minimum requirement for earthquake insurance to be offered in California for a deductible. And it really is there meant to increase availability. And then from there on, it expanded, they loosened up the deductibles, increased coverage. And then in the last couple of years, they started to pull back and reduce coverage, reduce deductible availability for certain types of homes, and we'll get into that in just a minute. But before we do that, let's take a look at what is private earthquake insurance. Private earthquake insurance, or private standalone earthquake insurance, is offered through independent insurance companies, and some of the most well-known private standalone earthquake insurance companies at the moment in California are Palomar Specialty, GeoVera Insurance, Zurich American Insurance, and these policies are usually much more customizable, and they have different underwriting models, which is, I would say, a stricter underwriting model than what the California Earthquake Authority is, and they have more deductible choices, as low as 2.5% deductibles. We'll get into that. And then, of course, a different pricing structure than the CEA, so it's going to be priced differently. You'll see in a minute. And the biggest difference for CEA versus private earthquake insurance is the flexibility. So the CEA is going to be more standardized. It's either 5,000 personal property or 25,000, and that's it. Or you'll have just a fewer deductible choices, and it's more fixed structure, where with the private earthquake companies, you have more deductible choices, you have more flexibility with personal property, loss of use, the coverage structure, what type of coverage you could get. And let's take a look at the deductibles. And the deductible with earthquake insurance is a percentage. It's not a fixed dollar amount like the home insurance usually are, which is like 1,000, 2,500, 5,000. Now, so if you have a percentage, and deductibles range from 2.5% to 25%. And if we look at this example here, say we have a $600,000 dwelling coverage with a 15% deductible, that equals $90,000 out of pocket for the homeowner before the insurance company pays anything. So anything above the $90,000, then the insurance company would pick up the difference. So if you had a $150,000 loss, the homeowner would see a check for $60,000, 150 minus 90. And the CEA has usually, we mentioned, a more rigid deductible structure, and this may be restricted. And recently, when I mentioned they pulled back some of the areas to 15% or higher. We'll get into that in the next slide here coming up. Now, private earthquake insurance companies offer more deductible choices. They have more flexibility and potentially a lower deductible option in most areas of California. So, again, so let's take a look at a deeper look into the deductibles. The CEA deductible options are 5%, 10%, 15%, 20%, and 25%. Now, the restriction in some areas, for certain homes, a restriction of 15% or higher deductible is the only option for homes with dwelling coverage of $1 million or higher. So if your home insurance dwelling coverage is $1 million or more, you can only get 15% or higher deductible. You cannot get the 5 and 10% from the CEA. Also, if your home is built 1980 or prior with a raised foundation, you have a cross-based or post and pierce foundation that has not been retrofitted, you're also going to get a 15% or higher deductible. And many homes in California are 1980 or earlier, of course. There's a lot of homes and raised foundations. Let's compare that to the private earthquake insurance companies. Palomar, the deductible, the Palomar Insurance offers deductible ranges from 2.5% to 25%. At the moment, the Palomar has no restrictions on deductibles, so you could get the 2.5% deductible pretty much anywhere in California. So that is a huge plus for Palomar. It's one of our favorite companies to use. GeoVera, another very good, very competitive insurance company. Deductible ranges from 2.5% to 25%. Now, GeoVera has restrictions on the, in certain areas of high-risk areas to a higher deductible. So in certain areas, you will not be able to get the low deductibles that are available. Zurich deductible options 5%, 10%, and 15%. There's some areas in California you can only get 5% or 15%. Some areas you can only get 5% deductible. The 10 and 15% are not available. In general, the 15 may, but the 10% may not be available. Okay, so here we are with the coverage differences, and let's take a look at on this chart the coverage differences between the CEA and the private earthquake insurance companies, individually Palomar, GeoVera, and Zurich. So the dwelling coverage with CEA must match to your home insurance amount. It can't be more or less. Okay, with Palomar, GeoVera, and Zurich, it can be equal or more. You can get more coverage, it just can't be less. With CEA, you cannot get more coverage, so that'll be the fixed amount. Why would you want to get more coverage? Homeowners may want higher coverage because the home insurance policy that has the extended or additional replacement cost of 25%, 50%, sometimes 100%, in addition to their dwelling coverage amount, is not available on earthquake insurance policies. It's just strictly the dwelling coverage amount. If you want more with the private carriers, you can increase it. With the CEA, you don't have that option. So if there's a demand surge for construction, that is all the coverage you're going to be able to get with the CEA. With Palomar, GeoVera, Zurich, you can get more coverage. One more thing with dwelling coverage that is not here listed is masonry and veneer coverage is not covered by the CEA. It used to be an option you can add to the CEA policy, but that is no longer the case. So masonry veneers, if you have brick veneer on the outside of your home, or you have cement siding, stuff like that, it's not covered with the CEA. Palomar is included. Zurich has it included. With GeoVera, you can add it for the coverage as an option. Now, other structures coverage. This is your detached garage, the ADU, a pool, patio, barbecue area, paved areas in the back of your home, retaining wall or fence. That is other structures that is not covered by the CEA, is not available with the CEA policies. With Palomar, other structures you could get up to 100% of the dwelling coverage, equal amount of coverage to your dwelling. You can have anything you want. If you don't want it, you don't have to get it, but you can get as much as you want, up to 100%. GeoVera they'll give you up to 25% of the dwelling coverage, and Zurich 10% standard. That's what they offer, 10% of the dwelling coverage amount. Personal property. This is contents like your furniture, breakables, electronics, stuff inside you can pick up, walk out the door, clothes, jewelry, and personal property. The maximum coverage you could get with the CEA is $25,000. Okay, and only $500 of that is for breakables coverage. With Palomar, you could get up to 100% again of personal property, 100% of the dwelling coverage for personal property. So if you want 50, 100, 200, it's up to 100% of the dwelling coverage amount. $25,000 of that will be for breakables coverage. And GeoVera, 75% of the dwelling coverage amount. Again, $25,000 for breakables included. Zurich, 50% standard for the personal property coverage, and they'll cover up to $50,000 for breakables. If you add a special endorsement, it'll go up to that high. Loss of use. This is additional living expenses in case you have to live elsewhere, pay rent elsewhere while your house is being reconstructed during an earthquake, after an earthquake has done damage to it. And as you can imagine, this can add up. It's a very important coverage for many homeowners who don't have a second home or somewhere to stay, and the cost can be a lot. So up to $100,000 is what the CEA will offer you, so which is not bad. Palomar, up to 100% of the dwelling coverage amount you could get for loss of use. So that is great. GeoVera, up to 35% of the dwelling coverage, which is not bad. You can get for loss of use. Zurich has $100,000 or up to 20% of the dwelling coverage amount. So these are the coverage differences between the CEA and the private earthquake insurance you saw. So pricing. Is private earthquake insurance, after all, they have more coverages, is it more expensive? Is it always more expensive? It's not. Sometimes private costs less, sometimes the CEA costs less. And this all depends on the zip code, in where your home is located. It dictates a lot with price. So certain areas the CEA is more competitive. In certain areas private earthquake insurance companies are much more competitive. And construction type, that matters. So if you have a certain construction type that does not qualify with the private earthquake insurance carriers, the CEA is going to accept everybody, because it's as long as your home insurance company accepts you and it's one of the participating insurers that offers the California Earthquake Authority, then the CEA is going to accept you. So the year built, same thing. If your homeowners insurance accepts you, but you have a very old home built in the 1800s, and the private earthquake insurance are not as competitive for those homes, then the CEA makes more sense for you. The deductible is chosen. If one company is offering you a higher deductible, but you want a lower one, then of course that has to take into consideration which deductible you want, and the price could be different for with the CEA versus the private. Okay, and let's take a look at the claims and financial strength. Both CEA and the major private earthquake insurance carriers are designed for catastrophic exposure, and their financial strength matters. And so the goal isn't just buying a policy, it's understanding how that policy would actually respond after a major event. Okay, so one way to consider this is to look at the financial rating by the AM Best rating, which is an independent rating institution for financial institutions. And the CEA has a B++ financial rating by AM Best. Palomar has an A, which is 2 notches above the B++. GeoVera, again, A. And Zurich has an A+ financial rating. Okay, so who might prefer the CEA? Well, these are homes that don't meet the underwriting guidelines of private carriers, of course. Then the recommendation would be the CEA, and it's a no-brainer. So they want a basic coverage approach. Some homes may fit better pricing, as we spoke, with the location, and some homeowners prefer to stay with the existing relationship of their home insurance companies to have it all in one there. And then who might prefer the private earthquake insurance? Of course, the pricing at the locations where the home is more competitive with the private earthquake insurance carriers and wants more customization, the deductible choices, and higher value homes, they have those veneer coverage in the pool, other structures, all these things come into play, who want more flexibility. And many California homeowners today are at least comparing the options before automatically defaulting to the CEA available rates. Okay, so, and the biggest mistakes homeowners make is only comparing a premium. So ignoring the deductible, it's something that just get it. Insurance is not fun. They just want to, and sometimes they just do it just to get rid of it and not deal with the headache. But spending a few minutes, half an hour, with an agent who's aware of the options, who can present to you, will pay dividends. And assuming all earthquake policies are the same, they are not, as you saw. Not understanding exclusions, not reviewing loss of use and coverage. All right, folks, so that's it for CEA versus private earthquake insurance. I hope you found this video helpful. And as you saw, there is no one is always better than the other. It really depends on your budget, the location of your home, the financial situation, what your deductible you want it to be. So all these things have to be considered, and best is for you to understand actually what you have before the need to use it. If you like to learn more about earthquake insurance, you could go to our website, earthquakeagent.com, where we have a learning center full of information you can browse. You can also request a quote there to compare the standalone earthquake insurance to the CEA option from your home insurance.